Artest looking, gets it to Bryant. Bryant dribbling, has to put it up with the buzzer. Banks it in! He banks in the three! And the Lakers...
Boom, baby. What is going on, Insurance Syndicate? Happy Winning on Wednesday. You know what time it is 9 a.m. Central here within Syndicate HQ. We are live again for Winning on Wednesday. Let me know that you can hear and see me in the comments. I see y'all starting to tune in now. I don't know if you guys can feel the energy in if you can see it on me or you can hear it in my voice, but I'm really excited for this freaking show today. I've got some just amazing guest that had answered the call late. So we had a late call out, and then these two gentlemen accepted the call. So I'm really excited to have them on here and talk some shop. You guys can check out what we're going to be talking about in the description. Real quick before we get going, shout out to Viva Virtual Solutions. They are the main sponsor of the show and the main virtual assistant preferred vendor here within the Insurance Syndicate. You probably see Lily there in the comments, and shout out to Rob Lopez, who is the CEO and founder of Viva. Seriously, couldn't say enough amazing things about them. Highly recommend them. Couldn't run the group and run all of our clips and all of our edits and shorts and publishing without Lily. And then ultimately couldn't do what we do within our agency when it comes to virtual assistants and who we partner with in Viva. So again, if you're in the market for a virtual assistant, definitely check out Viva. Highly recommend them. Been using them for years. But I mean, I already kind of kicked it off, y'all. I'm bringing the freaking energy. It's Winning on Wednesday. You know what time it is. Start dropping those weekly wins in the comments. We want to be able to celebrate you. I don't care how big or how small. Start dropping those weekly wins in the comments, and we will make sure and celebrate that win. My weekly win, well, it's not softball again. I played exceptionally well last night, but we lost by 1 point. I would have to say it was my youngest daughter's first birthday. So it's crazy. You know, even looking at, I love looking at Facebook memories sometimes, and you just look back and you're like, gosh, man, like that was her, like when she was first born. And then here we are 12 months later, which the 12 months just don't even feel freaking real. I mean, it's just gone by so fast. So that is definitely my weekly win. We had a bunch of friends over, and we all celebrated, had a great time, probably stayed up too late on a Sunday for a 1-year-old's birthday party. But it was good. So again, start dropping those weekly wins in the comments so that we can celebrate you. But without further ado, I'm going to go ahead and we're just going to get into the show, y'all. We are talking everything money, marketing, and market share. So we're really going to break down again where we're at as an industry as a whole here within the market. You'll see Brian come on and talk about the property and casualty space, but obviously we have AEP and OEP starting in the next 2 weeks as well. So anybody that's in that life, health, Medicare space, definitely stay tuned in. We're going to talk through some marketing, but then we're also going to talk about how you can leverage money to double down and crush Q4, hit your year-end bonuses, your profit sharing if you're on the property and casualty side, that are just having a freaking amazing AEP. So without further ado, I'm going to go ahead and bring on our guests. We got Brian Kutayiah and we've got Ryan Stewman. What's going on, gentlemen?
What's happening? Good morning.
Good morning. Good morning. Thanks for tuning in. Real quick, we'll just do a quick little round robin, and then we'll just get into talking some shop. But Brian, for anybody that doesn't know you, I mean, I'm sitting here rocking our swag too, but Brian is the one that's always suited up. Brian, let them know, quick little 30,000-foot overview, and then we'll pop to you, Stewman.
Good morning, everybody. Yeah, Brian, you know, what do you want me to say, Joe? Clearview started out of necessity, tired of being held captive, and we're like, hey, we're going to do our own thing, and we're going to do it big. And we started 4 years ago. 4 years ago. It's been a hustle. It's been a grind, but I'm glad to say we've turned a corner, really. Things are going really well. We not by chance, not by luck. It was pure determination to get to this point. And now we operate in 36 states. We have over 200 agents that are growing their books with us, and we're just having a blast doing it, man. Just love watching agents come in, excited, growing, building their books. Gets me excited to keep going. I just love what I do every day. It's a blast. So, yeah, well, you know, we've got bigger plans for the next year, and the goal would be to execute on that, and I hope to see some of y'all on our side.
I like that. I like that. We do have some big plans, and we're going to Vegas next week too to kind of kickstart some of that. Speaking of marketing and stuff, Stewman, we'll kick it over to you. You've been on the show now a few times, but for anybody that doesn't know who the hardcore closer is, give him a quick little something.
I'm the excuse me. I'm the CEO of a company called Closer Capital, where we help entrepreneurs, business owners get lines of credit, get term loans, and the capital they need in order to grow and scale their business. Been in finance for 21 years. Started the whole influencer online selling courses industry. Sorry about that. I've also done pretty good in that as well within the last year or so. But, just been around on social media for a long time. If you follow my page, I like to rant about politics, shit like that. But my job is that we loan money.
Love it, man. Love it. And I got to meet Stewman through Apex, y'all. And I believe, are you still offering the lifetime or no?
No, the doors have been closed for the last month. So September was the last. This is the first time I've ever shut it. Like, the program's not shut down, but the enrollment portion is. We're going to reopen it on Black Friday with a different format. I used to do Apex used to have like 3 levels, the network, and then a entrepreneur level and executive level. And I'm just not at a point where, for 2 things, like, I've helped so many people buy Lamborghinis and their dream home and make $1 million that it doesn't give me the same feeling. Like, after a brain surgeon saves probably 50 lives or so, it's just a job, after that point. And I got tired of kind of being in a business where I had to be the personality all of the time. So I have made that to where it more complements my lifestyle and my other business. Actually, we just did, Joe, our last ever entrepreneur meetup last week. So I sold my building.
I was like, where'd you do it at?
Yeah. So that's what I'm gonna tell you. I got to tell you the story, right? So you people are going to love this. You didn't ask, but I'm going to tell you. A few weeks ago, I was in Florida, family vacation. Ain't taking family vacation in 2 weeks. I've been grinding in 2 years. I haven't been grinding so fucking hard, man. And finally get my family out. I'm working in the meantime. I'm working on a real estate deal for, high 7 figures, and need for a piece of real estate that I own, my office. And I'm like, I go on vacation 2 weeks before this thing's going to close, right? But because by the time it closes, my kids are going to be in school. But I'm like, we're on the downhill slide. I got this. I can take a week off and go on vacation. So we get there 2 days into the vacation. So like day 2, I'm sitting on the back porch, shooting star comes by. I'm like, that's really cool. I never seen one. It was like in 3D in front of my face. So I'm like, I'm not going to wish on it. I'm going to pray on it. So I just prayed on this shooting star. I said, God, please let my building close on time. That's all I really care about right this minute, right? And the next day, I go to the beach, have a couple beers, whatever, come back, take a nap, wake up from the nap, check my text. They canceled the contract, y'all. I'm like, this fucking shooting star shit is a hoax. It's bullshit, Okay? It's complete bullshit. Don't believe it. I had a choice at that moment, ruin family vacation, which I'm totally capable of doing, or just like, I'll figure it out, right? So I chose the latter. I come out of the bedroom. My wife's got the kids in the corner going, look, he's probably going to be upset. Like, she's like coaching him, like, we won't kill us, but he's going to be loud. And so anyway, we had a good time, came back the next day. So this is 3 days later. I get a call from my realtor. He's like, you are not going to believe this. These dudes were about to go pay cash for this smaller building, and we just happened to put your stuff because I knew I needed to put it back on the market immediately. And they say they want to close in 10 days with cash, but they need to come look at the building. And I'm like, oh, sweet. And it's the Segway company, like the scooters that, mall cops and shit ride, right? Yeah. And so they came in and looked at it. And I'm telling you, I've never looked it up, but I'm pretty sure this has to be a world record for how fast somebody's ever closed a commercial transaction in history. I closed that bitch in 6 business days.
Wow.
From like signing a contract to cash in the bank account, 6 business days, dude, and closed on time. So my prayers were answered. So I had to apologize to the shooting star issue, but like, what a crazy, crazy wild ride,
Yeah.
And,
well,
it wasn't like 6 days of, hey, they sign a contract and we wait 6 days. It was 6 days of hustling inspections and all the dude. It was nuts, man.
Well, and it's not a small piece of freaking commercial property either. What was the square footage on it?
22,000 square feet on 4 acres. So it was a big, huge commercial complex that I owned. And I owned it by myself, so I didn't have no partners to fall back on or anything like that, you know. And so, or to go raise money from or go make changes with, you know what I mean? It was just me rolling it. But so anyway, this is where it gets even better. So now I run a lending company. I can't have the address as my house, and you can't send wires to PO boxes. So I got to get another office, even though my team's 99% virtual. And so I'm like, okay, cool. I go and I get my commercial guy, my real estate broker, to send me a bunch of listings. I don't look at any of them, but one of them is the Apex building, and it's brand new. What are fucking chances? First of all, right? It's literally called the Apex Tower at Legacy, it's brand new. And so I'm like, well, shit, that's clearly the one. In my old building, just so you know, Brian, was called the Apex HQ. This is the Apex Tower on Headquarters Boulevard. I'm like, I don't never seen a sign in my life that was so fucking evident, you know, that this was my place. So, and by the way, when you look out the window in my office, across the street is Ryan Consulting Firm. So like my name's on the building across the street.
And there's a Ryan Steakhouse down over there. Too, right?
That's the only thing we're missing for real. And so this is a 14-story, 220,000 square foot facility. So it's 10 times bigger than mine, but it's vertical, right? And so I'm on the 9th floor. And typically, I just need like 3,000 square foot. So when you typically need a small thing like that, you're like by the broom closet around the corner. Well, there were these 2 big companies that took up the floor, but they just happened to not need like 2,600 square foot right in front of the elevator. And I'm like, shit, man. Like, I don't care how much this costs. Like, I'm like, all the signs are here, but it's literally 1/10 of the cost of my building, of owning my building. And if the AC breaks, I don't got to pay for it type of a situation, you know. But it's a really cool, you'll have to see it, Joe. It's a really cool mixture. It's at the Shops of Legacy, and it's on the Shops of Legacy and Granite Park border. So like 3 minutes from my house, kind of where we met last time in that area.
Yeah.
And the cool thing about it is we just did our last event on the 7th floor. There's like an outside balcony and grill and a kitchen area and a 60-person conference room and a boardroom. So like all the shit in my old place that I had to pay and own to be able to use, now these are amenities in this new place. Plus it has a gym and all sorts of cool shit. So I'm super excited about that. That was a long-ass winded explanation. Sorry about that, y'all. But
no, I mean, what that, it's funny. It makes me think it's because what you're talking about in that 6-day execution, it's actually what, you know, Brian kind of led with. And I wrote it down is it's not by chance, not by luck, it's by determination. You got that freaking done. Right.
100%.
I want to shift that to you, Brian, and kind of talk through. Let's start on the, we'll call it the market analysis, at least from what you're seeing, Brian, on the insurance side of things. Like, why has it taken so much determination? And then also, you know, what do you think that determination, how are we going to be rewarded for that determination in the next, or from the past 2 years, because of what the market is doing? And again, maybe a little specific to property and casualty, but maybe break some of that down. What do you think?
So when you're doing something, you can talk all about what you're going to do, right? Hey, I'm going to do this, I'm going to do that. Nobody gives a shit about what you say you're going to do. They only care about the results, right? That you're doing the thing, right? So given our own story, right? A big carrier that we work with, 2 years ago, I couldn't get anybody on the phone, right? 2.5 years ago. No one would return my phone call, my email. No one was giving me an explanation as to what was happening with our contracts and our accounts. Couldn't get anybody to talk to us. And most people would have said, oh my God, this is crazy. Like, okay, I'll move on. But I kept emailing, kept calling. I've talked to every single person that would talk to me at that company until the right person called me back. And eventually, after months of hunting down people after people, the right person happened to call me back. And I'm like, here is what the hell's happening. And in a blink of an eye, everything changed, right? Every single thing changed. Now, it took 6 months to get to that point, but in a matter of a day, we were viewed as a whole different company than we were just by finding the right person to talk to, right? that decision maker, that person understands what you're trying to do. And now that carrier is our biggest market. And and I have to say, we're probably one of their most loved agencies.
I'm going to dinner with them tomorrow.
which is very strange, right? Thinking about how we started with them to where we are now. I mean, we're getting, hey, come to this baseball game, come to dinner, have this, take that. It's insane, absolutely insane. And a lot of us, when we, in our lives, like, we're doing stuff and it gets really freaking hard, right? And that point to where it gets really hard, most people say, you know what? I can't push through. Like, I'm done. But I guarantee if you just stay persistent, push through, you're finally going to break that wall down. And that's just one example of what's happened to us recently, right? There's a lot more, but that one, and this is a big one. I mean, now we have full access to anything and anywhere we want with this one market that's really going to change the game for all of our agents. And I imagine after your dinner tomorrow, Joe, you're going to be very excited about that, and you're going to be happy. I think it's going to be a really good dinner. So get the best steak on the menu.
It's a Brazilian steakhouse, so there's going to be a lot of that. I think to piggyback a little bit on that, Brian, like, I think where we've won, and this would be my encouragement to the agent, is it is that non-resident piece, that kind of that national play, which again is way more difficult than just being a Texas agency or a New York. Well, I don't know. Texas and New York, maybe not the best example because those are difficult states by themselves. But again, you get my point where that national presence for Clearview and the ability to write business anywhere that we want. Like, I love being able to say that to an agent is, hey, you don't have to say no because of the product, and you don't have to say no because of where you physically sit. Stewman's a great example of this. I mean, his reach, the millions of views that he gets just by freaking posting on social media. I mean, the power that Facebook and Instagram and TikTok, whatever platform you're using, has given the agent to sell outside of their warm market. I mean, it's changed the game, and I know you've seen it. And I mean, you're the one looking at the numbers every single month. I mean, it's crazy to see. And really, it's not even that crazy, y'all. Like, you can just go pick up your non-resident license and in 48 hours, for the most part, write business. But then I guess it does come down to the carrier relationships. Like, what are your relationships like with your markets? Yeah.
I mean, listen, I remember I was talking to another national carrier, and I said, hey, we want a national appointment. And they say, the fella that ran the program at the time, he's like, go national first, then come back and talk to me. Right? So it's kind of like building credit, right? Like, okay, you need credit to build credit. How do you get credit to build credit? But you got to find a way, right? You got to find a way. But to answer your first question too, Joe, the market is changing. The PNC market is starting to soften up, right? It's been incredibly difficult the past 2-3 years. It's been really hard. Now we're starting to see rates coming through. States are, approving changes, and carriers' balance sheets are looking really good. Everyone's making money. Almost everyone is making money, and they're excited, and now they want to grow. So for those of you that are hungover from the hard market, this is the time to double down on your growth. 2026 is going to be absolutely insane. And if you're not doing anything to keep your retention for your customers, I guarantee we will come and take them. Like, we're hungry. We're going to take them, right? So competition's going to come back. Rates are going to go down because of competition. People are going to be shopping, so your retention is going to take a hit. But at the same time, you can write almost anything you want again, right? Given that you have those relationships to do it. So 2026 is going to be a massive year for growth. That's what we're gearing up for. That's what we're, going to double down on: our marketing, our reach, our partnerships, whatever we need to do to hit those targets.
Right. And this is where I think a lot of agents, one, they wait till January 1st. Let's just finish out the year. And it's like, dude, if you're waiting until January 1st, you've already missed the boat, because we're doubling down right now for quarter 4, right? I mean, hell, even prepping for quarter 3 and quarter 2. I mean, this whole year has been leading up to, we know eventually the market is going to shift. But then, Stewman, I want to ask you this: what's the timing piece, and how crucial that is when it comes to doubling down and reinvesting in your business? I think that's where we'll lose people, right? It's like, okay, yeah, I'm ready to double down. The opportunity is now in front of me. The markets are open. All right, what are my options? What can I do? And then it's like, oh, I got to go get some money, and then I got to spend it. I got to reinvest. Stewman, talk through it on the lens of closer capital and what you're seeing just in general, and maybe not even necessarily just the, insurance people or anything, just like, who are you, like, when you're talking with these business owners and, their strategy and stuff, and then ultimately, like, how important it is, to the timing piece of when it comes to doubling down, getting money, getting capital, reinvesting that into your business.
Yeah, well, it's funny, Brian. The same thing in my lending business. It took us about a year. There's a certain volume you have to get to in order to be like a direct lender, they call it. And so you're not going through like 5 middlemen, probably really similar in the insurance world. And once we had hit that volume and were able to apply and get in, which just took, time and effort and energy, like you said, dude, it changed the whole, not just our ability, but it's kind of like you were saying, took us nationwide, changed our whole perspective. So very, very similar path, even though I've only had this company for about 2 years now. It took us the first full year to get that status, which is tough, and because we're competing against people that were smoking us. And then now we're the competitive one. So, but, I think a lot of people that I see at Closer Capital, and we do a ton of business monthly. We process hundreds of applications monthly. And a lot of people, after you guys just said it's been a hard season, it hasn't just been a hard season in insurance. It's been a hard season for everybody. There's very few people that are richer in 2025 than they were in 2022, 23. There's a few, but it's far in between. Most people, like, every bit of money that they made during the 2 or 3 years that they were balling it, they've spent that trying to stay alive and in their business. And some people aren't really that financially responsible. So, they may, what I see is a lot of people want to double down on their business, but they got like half of what they used to have capital wise. Right. And then it makes it sketchy because most lenders, if you say, yeah, I'm going to use this money for marketing, they're like, oh, the shit, don't loan it to them. That's like, to a bank or a lender. If you say that, that's like saying, I'm gonna use this money to go play blackjack, and because we can call it scientific advertising, but it takes a lot of money to get the science down. You don't just have or maybe you even go and you got a call center that sends you warm transferred leads. You've still got to know your metrics of how many of those and what quality leads are they. How many times have you got warm transfers and it's Granny who just called during the Jerry Springer show to win a lottery ticket and you're trying to tell her freaking right? Those kind of things are out there. And so people are like, shit, okay, so even if I'm capable of getting my hands on money, where's the best investment? And I say this to pretty much every industry that I talk to. The best investment is in recruiting people, right? Using that money that you get to go recruit superstars, whether it's instead of paying let's say that I own an insurance company and you two guys are on my recruiting list, right? Which would be the type of people I would want to recruit. So, I'm going to say, let's say I can go get a term loan for $100,000. I might be able to say, hey, Joe, come over here, bring your whole book of business. We'll give you a bigger commission split and a $25,000 sign-in bonus. Now, instead of me going and guessing what marketing is going to be, I just got a guy that's going to bring $2, $3, $4, $5 million a year of business over here. For a $25,000 for 25% of the loan. So now can I duplicate that 2 or 3 more times with somebody else? Now I've spent money on what the banks would call infrastructure, employees, right? To be able to, contractors in this case, to be able to do that. So, I watch a lot of people, they go get a loan and they pay off their bills. And I always say that's a bad idea too, man, because if you've already got other payments and you're out of money, like let's say credit cards are high or whatever the case may be, and you're making payments on those, don't take a new loan to go pay those off, because now all of a sudden that new loan didn't do you any damn good. You're in the same situation. You got no fucking cash in the same payment, right? Use the new loan to go get money, sign the Joes, or, put it into some form of marketing. If you've already got a predictable thing in play that that you've been using for years, put more money into that. Go use that get a better CRM, those kind of things that are going to make you, go hire a copywriter to do your email follow-up sequence that's going to be, more effective and a higher conversion rate and a bigger click through. those are things. Because like in insurance, you don't really have to go buy another brick and mortar building. You don't have to go get furniture for your thing. Most of you guys can work from home. Most agents do these days, just like in my business, right? So there's not like a lot of big assets a broker or either an agent or a broker has to actually go out there and get their hands on. So it's like, if I get my hands on capital, let's say I get $100,000 loan, but I owe $500,000 in debt, right? And so I go make this $100,000 loan. If I can sign up 3 Joes, then I've just added, let's call that $15 million a year to my business. That's going to at least, and I'm still just going to make the payments on this debt over here, but that's going to at least let me demolish that debt while managing my cash flow and using the money that I got from the bank in order to grow. I watch so many people that by the time I get to the funding call, let's say you get money on Monday, Friday, I do funding calls is, hey, can I help you with anything? Just to kind of loan my expertise at this level to our clients that want to. And they're like, yeah, man, just paid off a bunch of credit card debt. Like, son of a bitch, man, I should have talked to you on Tuesday. You know what I mean? So, because again, now you're in the same situation you were. And I get it. Most people are scared of debt. They're like, I just tacked more on. And now, but you already had that other shit. Now you got cash. You got to use that cash to create cash flow, you know?
Yeah, man, dude, I actually really like that book roll with a signing bonus. That's actually, I'm like, you sure you ain't in insurance, bro? Like, that's pretty damn smart. Where, again, typically I'm looking at that probably the other flip side. But yeah, you go and find somebody who's got a sick, nasty book, and it's like, yo, roll it to us because we're playing off the override or the royalties on that.
Well, Joe, if you're like, and this is how I roll. I like at Closer Capital, I didn't just go and hire people that didn't. I'm like looking for people that already got their shit together and can come in, right? Because I don't want to have to train people and spend all that time. So and so, you know, let's say that you make you're an agent, you make $250,000 a year with the book of business you got and it's growing. If I can guarantee you that, plus a better culture, plus a better opportunity and upside, potentially equity, plus a signing bonus. Like, here's what this will allow you when you got money to compete like that. Here's what most people do. After a while, they get comfortable with that top producer. After a while, they stop giving them the rewards and taking them out to dinner and all that stuff because it's just expected. He's just him, right? And then after a while, yeah, they just do their job and they like the money, but they don't feel appreciated anymore. A lot of times people like appreciation more than they do money. Well, here's the thing. Brian comes in this example and he's like, yeah, man, I'll give you a little bit bigger commission split. Just come over here. It's like, that sounds good. Then Joe's like, hey, come over here. I'll give you the same commission split Brian gave you, but I'll give you $50,000 to move.
Right.
It's been a hard 2 years right now, right? Like that $50,000 can fix a lot of things, you know, pay off credit card debt, you know what I'm saying? Taxes that you owe, whatever the case may be. Now that, but you're not going to do that to someone who's going to bring over, you know, $40,000 worth of business a year. You're going to do that for someone that, you know, is going to put another $100,000, $200,000, $300,000 a year to the bottom line of your company. It's the best ROI you're going to get.
Oh, 100%.
They do in sports, you know what I'm saying? They don't go and say like, you know, hey, just come on this team. They're like, no, we're going to give you a signing bonus to come over here because we know you got options everywhere.
Yep.
Right. What are your thoughts on that, Brian?
I love it, man. I love it. I appreciate you bringing that up. You know, I a lot of my calls with you know, our franchisees that are growing is, hey, I can't hire. I need to find somebody. I need the help. And I'm like, what are you doing? How are you attracting these people? You know, I'm looking at resumes. I'm having calls. I'm offering salary plus commissions. Okay.
So is everybody else.
Right. Everybody else. Yeah. What are you doing different? So, you know, that's been a struggle for me to be able to, because, you know, like for us, I don't have a hard time attracting talent, right? People come to us all the time, but how do you, and you've done probably more of this than we have, how do you train for that, right? How do you train, like, what would be your advice? So let's say we have a new franchisee come in, they are killing it. But the issue is you have a producer, right? A producer is not an operator, right? They can produce. So the getting over this hurdle, now the producer comes in, they're building a book. All they know is how to sell, possibly service. They can't attract talent. They can't hire. They can't train. They can't motivate. They just know how to build, right? This one thing that they're doing. Right. So they get to a certain point where, you know, maybe to get to a $2 million book and they're making $250,000 a year. And they know they need to get to the next level, but they get stuck because now they're being bogged down with all the service work and they can't sell as much, but they're retaining what they have. And that's it. They're going to be flatline. They're going to be like this forever. What would be your advice to them to get over this hurdle, right? How do you get to that next level where you start hiring salespeople, you start becoming an operator, getting out of that producer mentality and getting into the operator mentality?
Well, when I was a salesman, and that's been many moons ago, but when I was like a day-to-day doing my thing, selling mortgages back in the day, I hit that. I would have like a month where I did 20 deals, and then I was so busy I didn't have time to prospect. So the following month I'd do 10, and then I'd have downtime that month, and the following month, and I just rode this roller coaster, right? Mm-hmm. And so once I figured after 3 or 4 months of riding that roller coaster, I hired an assistant. And so the first thing is like everything I didn't want to do, they did. So calling people for paperwork, in y'all's case, filing claims, shit like that, like anything that, like, all I did was sell. And it was this old man named Bob. And like literally I was like 30 at the time and Bob was 63. But and Bob was about to lose his job. I saved his ass. But Bob, after I left 2.5 years later, became the assistant to the CEO. So I did him good, man. But he passed away a couple of years ago during COVID. He was a good dude. But anyway, and then me and Bob got on a groove where now we're in the same situation. Now we're doing 40 deals a month and then 20 and then 40 deals a month. So then I hired this guy named Jason. And his job was to come in, and he was a hybrid between me and Bob. So if we had a bunch of applications in the queue and not as much prospects coming in, cool, that's my job, right? So they need to go and process all the applications and get them closed and everything else. Because my whole thing is I only want to talk to a customer twice. Once for the application to get them on board and sell them the rate, and then once to go over the closing disclosure and let them know this is what they need to bring to closing. Like those are the two things that are the easiest for someone who's not a salesperson to mess up. So those are the two things that, like, that's what I want to do with every single client. But then if we got busy and we had a whole bunch of leads coming in, and then Jason could also take those leads and knew how to sell that stuff as well. But he wasn't like the greatest salesperson, but he was really good at the system. So once I told him, here's my system, my follow-up shit, he was pretty good at implementing that. And that in that particular situation with 2 people is as far as I ever scaled it, because I ended up moving on and becoming an entrepreneur shortly after, and obviously got a lot more people in that now. But that's the thing is, like, most salespeople, they don't think about hiring help because they look at it this way. They say, and I remember I looked at it this way at first too. Bob, this is a long time ago, 20 years ago, but Bob cost me, $2,000-$3,000 a month in salary at the time, which is $4,000 or $5,000 a month in salary right now. But I just told you we went from 10 and 20 to 20 and 40.
Right.
Okay, so I'm making probably $30,000-$40,000 after paying Bob his $3,000 or $4,000 that he makes because I hired him. Now, had I hired Bob and he sucked at his job and he cost me $3,000 a month, he wouldn't have worked there more than 2 months, right? Yep. Month 1, morning, month 2, you're gone, right? Yep. And you're really not looking for, like, in this instance, this is important because it still applies today. Bob was 63 years old at the time. He's not exactly going out there job hunting. Mm-hmm. You know what I'm saying? But so if I treat him right and give him a position that he can thrive in, that's the loyalest dog you're going to get as an assistant, right? Yep. And it turned out to be true. And my job too, and I think this is important that all the agents, brokers, the employers listen to this. Our job is not to, especially with the younger people, it's not to give them a job and pay them money. That's implied. Since the dawn of time, you take a job, you get money, right? That's automatically assumed. And a lot of the younger people, especially 20s and 30s, they don't look at stuff and I'm talking to you guys, but they don't look at stuff, a lot of them, as in money is that ultimate factor. Like when we were growing up, we had to make $1 million so we could drive a Lamborghini and go live in a mansion. Now you can rent that bitch for a weekend for $5,000. Yeah. You know what I'm saying? Get all your kicks and realize they're just piece of shit cars like everything else anyway. You can in that mansion that Sylvester Stallone owns for 2 days for $10,000 with a couple of your buddies and split it. Like so money's not a big factor to them. Here's what really salespeople, and it's always worked for me for 15 years as an employer now. It's like, come work with me. I'll make you a better person.
Yeah.
Right. Like, and the better of a person you become, the more personally developed you are, the more money you're going to make as a byproduct, because the market is supply and demand. And there's very few people operating with excellence in the market, which means there's a huge demand and minimal supply. So even if you only stick with me for 3 or 4 years, you will leave here a better person. I'll give you an example. I had a 19-year-old young man named Zach Sasser.
Oh, yeah.
Come work for me. And he worked for me for 6 years. And he started off at $2,000 a month as an intern while he was in college. Wanted to quit college, wouldn't let him quit college. Told him, hey, man, you're already there. You got 1 more year, stick it out. When he got done with college, he moved from an intern to a commission-only salesperson. Zach, in 5 years, so the first year he was an intern, 4 years after that, in 5 years after that, because he worked for me for 6. In 5 years after being an intern, that young man is a multimillionaire. He did $12 million in sales for me total, maybe 13. He owns his own home plus 5 other rental properties. His Ford Raptor is paid off in cash. This guy's got a fiance. He knows how to be a father. He's seen me around my kids for 5 years. He's seen me how I handle people for 5 years. And he just left Apex maybe 2 or 3 months ago as an employee to go start his own roofing company.
Mm-hmm.
And so, now that's going to be able to take him to the next level there. And so when you can create stories, and I've got that with Drewby, I've got that with Blake, I've got these stories of so many people that came and spent, 2, 3, 4 years with me, and the rest of their life has changed. So now that I've got this track record of doing that, if Joe wants a job, I say, go call Zach and ask what it was like working for me. And Zach's going to be honest with him, because Stewman's hard as fucking David Goggins. But if you do what he says, that dude sets you up for life.
Yep.
Yeah. I think that so to add to that, right? I think for me, because I'm not a big, like, any of our salespeople, they're not like salaried or anything like that. I mean, they are commission only. But the reason that I'm different, or why somebody literally will leave a base job to come work with us, is the opportunity, right? It is the opportunity to become a better person, right? To refine and hone in on that skill set and really become the master of your craft. To me, it's about the opportunity. But then I wrote down, so what is that opportunity with you? I think one thing that, we really like to kind of push with Clearview is, like, don't get me wrong, if you want to stay with us, like internal and everything, great, but it's a career path, right? And any of our agents too, like, that should be something like, hey, this is so much more than just coming in and helping me sell a freaking policy. Like, this is, there's levels to it, right? I mean, I think that's probably one thing I've learned the most in the last, year to 18 months is, like, oh shit, like, there really is some levels to this freaking thing, man, where you think you're doing really well, and then you meet the one right person, you find the right person to talk to, and you're like, oh, damn. It's like they're at the whole other level. But I think it starts with the opportunity. That's what people are looking for. They're not looking, again, for what's going to pay them the most. It's like, what is the best opportunity for me? Not just for right now, but ultimately, in the next 5, 10 years. And I think I'll turn it over to you, Brian. I think that's what I like the most about how crazy this world is that we're living in now, with all the AI and all the tech and all the tools and everything. When I started in insurance 11 years ago, it wasn't this. I mean, you couldn't scale. You couldn't dump some money into a thing and just let it go. And I mean, and now we're rocking and rolling, right? So I do love that now, where we have agents, Brian, we're seeing it. And it's like, it's almost like part of me is like, damn, man, like, maybe I should have just been doing that. But then at the same time, there's nothing more rewarding than seeing somebody take advantage of what we know, what we've seen work, and they're doing in freaking 3 months what took me 3 freaking years to figure out, man.
Right.
Which is just crazy. Like, what do you think on that, Brian?
So, piggyback off of what Ryan said, with attracting people with your mindset is helping, right? Most employers are thinking, how are you going to help me, right? What are you going to do for me, right? And I've always been the opposite. It's like, hey, what can I do for you, right? And I don't know, 80% of my employees now own either their agencies with us, or right. Where I was before, a lot of them were still there and they own their own books there too. But my thing was, when I hired somebody new, I said, look, give me the next 2 years. I want you to be fully committed to what you're doing. I want you to give me your all and your best for the next 2 years. And if you do that, you're going to outgrow me. you're going to outgrow me because you're going to want more. If you are a natural salesperson, you're going to want to progress. We never want to stay the same, right? Like I never get to the point where I'm like, come over to relax. It's not even about that. It's like, can I do more, right? Because that's what excites me, right? That's what gets me going. That's what wakes me up in the morning, right? What can I do next? And the same thing's going to happen to you, right? So I said, give me the next 2 years and make it the best you've got. Come in, be willing to learn, be willing to say yes, right? Eat shit a couple of days, do whatever you got to do, give it all, and you're going to learn everything that you need to learn to become your own man or woman, whoever it is, right? And I've had a bunch of those people come through, and maybe you should have Kenny on a call one of these days, right? So we've got a ton, and that's the kind of people I want to attract. That's the kind of people I want to work with, where I don't want to keep you here forever. I don't want to keep you working for me forever. You're going to outgrow it, and that's okay. And I find a lot of employers, I'm interviewing a new franchisee on Friday, and he's like, yeah, I'm working in this agency now, but man, I don't even know who owns the thing, and nobody's sharing anything with me, and I just take these calls, but I know I can do more, but nobody wants to help me start my own thing. Because a lot of people look at like, oh, this is my guy, he's selling for me, like, how do I keep him here forever? That's stupid. Stop thinking that way.
Right.
Think about how can I help you get better? Right? How can I help you be like me? Because if the more you do that, the more successful you're going to be too. Because you're just going to keep attracting people like that to you. So if you're tight fist with your people and you're not sharing your knowledge, your information, your money, your wealth, if you're in an opportunity, in a position to help them, you should do that. Now, I know what you're going to say. Oh, people are just going to take advantage of me. Sure, that's going to happen. I've had a ton of people come in here that we're generous, we're good, we're nice, we're kind. And people come in and they do take advantage. That will happen. It's going to happen. It's happened before. It's going to happen again. You can't control that. But what? 1 out of 10, 1 out of 20, maybe. But everybody else, they're going to come in, they're going to appreciate you, and they're going to be like, man, I am so grateful for the time I spent here. And I appreciate you putting me on the right track and putting me onto something that I didn't think about. That's exciting to me.
And you'd be amazed at, the reciprocal business you get, even if they're not still working with you either.
Right.
They're like, it's like, are you looking
a lot of ex-employees that send me referrals on a regular basis.
Yeah.
You're absolutely right.
Or like,
Zach, hate me too. That's normal, but a lot of them send me leads,
Yeah, like Zach bounces, and it's like, yeah, but he's obviously still pushing and funneling business into Closer Capital or into Apex.
Same with Blake. That's a great example that Brian was talking about with going back to Zach. So like April or May of this year, I approached him. I said, hey, a greedy person like what you were just describing earlier, Brian, would have done the opposite of this. They would have tried to figure out a way to get them on and push sales. But I said, hey, man, I'm fixing to set up a system that's not going to be very beneficial to you because we're not going to have a lot of high ticket, which is where you're getting the majority of your income. And we're never going to be able to sell this thing. And so even if you have equity, it's not going to do you any good. Meanwhile, you and your brother, and you've been doing it part-time, have this roofing business that you actually own and is a sellable asset that you've seen me help a lot of people sell. And so why don't I help you transition into that, which has a lot bigger upside, and both of us hit our goal. So now now it's been a few months since then. He's full-time in the roofing business. They're absolutely growing and crushing it. And that's the bet. And you know what, Zach, at least once or twice a week, it's like, hey man, I just sold this guy, or hey man, I sent this lead over to Taylor for Closer Capital, and dude, if anybody, you think about that, somebody hits him up, probably this happens a lot. Hey man, I saw you don't work for Ryan anymore. I was thinking about, borrowing money from Closer Capital. He's probably a piece of shit, huh? And Zach's like, no, that guy's like a father to me. And then think of the like, dude, okay, well, I'm sold. This is an ex-employee saying that, he's seen Stewman, every day for 6 years, and he is this thing. That is the biggest validation that you can get. You know what I mean?
Yeah.
Real quick, Stewman, I have to tell you, Nicole Moran is on here. She says hello. So.
Oh yeah. Hey, what's up, Nicole? Another Apex family member.
Yep, that she is. Well, so let's kind of use the last 15 minutes of this call. I want to talk a little bit how to leverage money, how to leverage debt, right? And how to get out of debt by leveraging it, maybe, right? And just the kind of strategies behind that. Brian, I'll let you kick that off a little bit just on what we've done on the M&A side of things. That's going to be specific to that. And then Stewman, I want to turn that over to you and just kind of talk through again any and everything that agents can do and utilize through Closer Capital. Obviously, I'm involved, y'all. And as we're going through this, I'll drop some links. I'll come back. I don't have my keyboard in front of me, but I'll drop some links, and then I'll do a separate post where you guys can book some time with Brian or myself, and then also Ryan, if you're interested in checking out Closer Capital, getting ready for Q4. So, Brian, I'll turn that over to you, man, because you're kind of who exposed me to mergers and acquisition. Like, that was never anything we were doing on the Redwood side, and a little scary, I think, when I first started, but I remember the first time when I sent you, I'll never forget this actually. And I was like, damn, okay, like I'm with a real-time company now. I sent you a screenshot of a book, Business for Sale in some group or something. And I'm like, dude, this looks pretty damn freaking nice. And you're like, go get it. And I was like, oh shit. That's like, I'm scheduling calls, man. Like, that was really cool. But obviously you've done a lot of those deals. Talk through that and how you've been able to leverage relationships, money, and use that to grow.
Yeah. I mean, we did it really out of necessity, right? So, when you're starting, sometimes it's scary to take debt, right? You're like, shit, I'm about to borrow $1 million, $2 million, right? Like that's scary. So for me, honestly, it wasn't in the game plan when we started. It was not in the game plan. And this is you need to have the wherewithal to pivot when you need to. So in 2021, when we started, the market was wide open. We were growing a ton organically. We're never going to acquire, we had agents coming down to us. Carriers are like, hey, how many new agents can you get us? And I'm like, yeah, as many as we need. And boom, middle of 2022, bam, done. Market shut down. Nobody wants to write business. And, carriers are like, yeah, we're not appointing. We're not selling. Right. I'm like, okay. I remember a year before I met this dude at Oak Street Bank, Scott. Saw him at one of these conferences. We were just chatting, and I was like, yeah, we're building this franchise. We're going to go national. We're going to do this. We're going to do that. And he laughed. He laughed at me. He's like, we were 1 year in, right?
Yeah.
And he's like, Brian, I'm at these events all the time, 2-3 times a year. I can't tell you if I had $1 for an amount of time I hear this from so many different people, I'd be a millionaire. And I'm like, oh, that's insulting. Fuck you. Watch this.
Right.
So, I hit him up when the market shut down. I said, hey, we're ready to acquire. And, I'm grateful for the relationship with Scott, because when a lot of people don't understand when they're going to borrow money, like Ryan said, you can't say, hey, I'm going to go spend this money on marketing. What is that? What are you gonna? What's the return on your investment? What are you gonna get?
Right.
So I worked with Scott for a couple months on, our accounting, our bookkeeping, make sure the numbers were right, everything that we needed lined up, so that we knew that we were, once we go get a loan, it wasn't going to be a guessing process, right? You already know that you're going to qualify because you have the metrics, the data to qualify. So we did that, and we found our first deal. And the first deal, really, I bought it just to buy it, just because I wanted to just buy something, see what the process was like.
Right.
We bought the first deal. We bought 2 together, and it was great. I was like, oh, this is not bad. And then, we're like, okay, let's keep going. So we bought the next 2, and that was good, right? That Redwood was involved in that one, and the other book, Freedom. And that was definitely a learning. It was a bigger deal, right? The first deal was maybe $400,000-500,000 in revenue that you're buying, and that's like, okay, that's manageable, 1 or 2 employees. And then you go buy like a network like Redwood, and you guys had like 50 agents at the time, and it was just nuts.
Some moving pieces, dude.
Yeah, so that was a bigger deal. That was a good learning experience. And then we bought a handful of other deals after that. But now we're at the point where we're just growing so much organically again. There's not necessarily a need to go and acquire. But our plan for once we end this quarter, early next year, is to go and acquire again, right? Because you want to grow both organic and inorganic, right? So the reason why you want to grow inorganic, this is where you look what private equity does, right? Private equity, they pick an industry, and I say, okay, cool. So this guy has 500,000 in EBITDA, and he has 500,000 in EBITDA, and they'll buy 6 of those, right? And now you go from 500,000 in EBITDA to 5 million in EBITDA, right? So the shop at 5 million in EBITDA will sell for a 10 times multiple, where the 500,000 in EBITDA will sell for 2x.
Right.
So if you buy up a bunch of 500,000 EBITDA shops, you roll them up to a 5 million EBITDA shops, you've just created money out of thin air, right? Just on your multiple, right? So, we're doing that as well internally, corporate office, and also for our franchisees. We've got a handful of franchisees now that have acquired books and rolled them up, right? Yep. So if we can do that at scale with everyone in the network and the franchise, we're doing our own and our franchisees are doing theirs. We all grow together. We all win, right? That multiple increases for everyone that's involved, right? And that's why I say we're a little different than what other people are doing. We're willing to open and share this information with people that are with us, compared to the other firms. They're like, what?
Oh, whoa. Yeah.
Whoa. Send it to us. We'll take it. Right? So I'm excited for that. We definitely want to get back into acquisitions, and we did a bad deal 2 years ago, a year and a half ago, kind of got punched in the face with that one. And I'm still, I think I'm fully recovered. So it's, and don't think that every deal you're going to do is going to be a good deal.
Right.
No. You're going to absolutely, if you're buying deals, you're going to end up buying a bad deal.
Why are they selling,
it happens, man. It happens to the best of us, right? JP Morgan just paid $125 million for a deal, right? JP Morgan Chase.
Right.
Paid $125 million for a deal. The chick just got sentenced to 7 years in jail. So even the big guys and the smartest people in the room sometimes get a bad deal. So we are not, immune from that either. But good lesson learned, and we know better for the next one.
I think, that it just goes right back to what we were talking about as far as keeping people and attracting people, dude. It's the freaking opportunity. Name another, insurance organization that is out there literally like helping with due diligence and finding books of business for sale for their people, right? Like giving them the lion's share of the commissions and everything, when obviously it would make more sense if we were monetary, like incentivized, like we would just keep it ourselves because we're going to make more than versus giving out, 80% of everything. Yeah. So I love that you said that too, because that again is what separates us where, hey, yeah, we may not be the big boys, but guess what? The big boys treat everybody like a statistic, and we will scoop up anybody that doesn't want to feel like a freaking statistic that still has the potential and is just looking for a freaking good opportunity. Or they're like, wait, really? Like mergers and acquisitions, like, man, that's how I want to start in the industry is actually acquire a book of business and get going. So I love that you said that. Again, it goes back to that opportunity, but the opportunity comes from the relationship. It comes from meeting Scott at that freaking conference. And then now it's funny. I was just commenting on his Facebook post yesterday. I was like, dude, you're such a good dad. Like I love his post and everything. And it's like, this is our money guy, man.
Yeah.
So I love that you say that. Stewman, let's kick that over to you, man, and let you kind of close out here the next, 5-6 minutes on Closer Capital. What is the importance of doing it now? I don't think we touched on that earlier, just the timing piece, right? I've heard you talk on it before where a lot of people wait till it's too late, right? The importance of doing it now and what you would instruct an agent to do and how they could utilize Closer Capital to increase their revenue, do their thing in quarter 4 before, January 1. Because, again, you're starting January 1. You're already missing the boat, y'all. So what you got on that, Stewman?
Well, we have something we call the investor arsenal. It's just fancy marketing term for multiple layers of finances, right? And so basically, like, let's say that you've got a agency and you can get let's say that you got an agency and you don't have any debt. You've never taken a loan out. The banks have either turned you down or you've never done anything like that. You run the company on a bank debit card for credit card stuff when you have it. we can set up a company for $250,000 in business credit cards. Like that's like an Amex, or not an Amex, sorry. That's like Visa, MasterCard. And those are 0% for the first 12 months, right? Pretty easy to qualify for. It's multiple cards, so it's not one card with 250 grants, 3 or 4 cards. We've got underwriters that we get in touch with to get the limits bumped on the back end, right? So that's the first thing. And even if you don't use it, you got it, right? Like that's a big piece. So many people think, well, I don't need any lines of credit or any money, so I'm not going to get it. Well, here's the catch. When you need it, they won't give it to you. You know what I mean? Because you're out of money. Okay. Borrow money when you have money. That is number one rule of banking. It's the golden rule of banking. Borrow money when you have money. They will not let you borrow it when you don't have any. The second part of that is you get a term loan or a line of credit. Again, that's $100,000 to $1 million, right? So preferably a line of credit. So you've got credit cards at 0%. Line of credits, they run in the teens and up in as far as that, because these are unsecured. They're not. I mean, like real estate, you can get a low interest rate because, Joe, if you don't pay your house, I can come take it from you. Right. Joe, if you pay your car, I can come take it from you. If you don't pay your business loan, I'm not going to go run that thing. You know what I mean? Like, I'm not going to show up and it's like, okay, now I did a loan for Dairy Queen a couple weeks ago. I'm not going to show up and run dipper cones because you didn't pay your loan. You know what I mean? I'm just off the money, right? Yeah. And so it comes a little bit higher interest rate. But you also have to look at it on a line of credit. Let's say that the interest rate's 20%, right? Which a lot of people be like, oh my God, that's so high. But you're not going to use it for 12 months. It's a line of credit. You're going to keep that money on it for 2 or 3 months. So if you divide 20 by 12, what is that? Like, I don't know, you'd be paying 5% over the course of 3 months, 3.5%, somewhere along that line. It's not a massive amount of money. It's a massive amount of money if you sit on it and you make the minimum payments for 12 months, which is why they give you a higher interest rate, because that's not good for you or the lender to be in that position, right? And so, like, let's say I get you $100,000 line of credit, charge it up today, pay it off in 90 days. Charge it up again, pay it off in 90 days. I really gave you $400,000 worth of credit for the year if you look at it that way. So saying maybe $250,000 worth of credit card at 0%, charge them up, pay them off in 6 months, do that again. You got $500,000 in real money. Right? Because it doesn't close after you pay it off. It's there to use again. Okay. Here's the best part too, is if you go use your own money and I go make a $100,000 acquisition purchase, right? So I go use my own money. So that means in order for it to be $100,000, there's been taxes taken out of it and all this other stuff that comes into a factor. So, and let's say it's $100,000, really, and $100,000, I'm losing probably $30,000 to $35,000 just right in that instant, right? Well, if I go borrow that money, maybe I got to pay 20% interest again. Maybe I got to pay $20,000 in interest, but I have a true $100,000. If I have $100,000 and pay taxes on it, I only got $70,000, $65,000. If I go borrow $100,000 at 20%, I got to pay $120,000 back, but that's still more than the gap that I was paying in taxes because debt isn't taxed, and I can write the interest off. The third thing, so, this is the arsenal. You have a credit card, you have a line of credit, and we do these a lot for real estate where they get a hard money loan to flip a house, and then we DSCR or refinance them out of it, right? But for the agency side of it, get yourself set up, go identify, like he said, 5 companies that you want to roll together for 2.5 EBITDA or 5 million EBITDA, and then go to the SBA. And here's the cool thing about the SBA, the finances of that, plus the finance of your working, plus a badass ChatGPT generated bulletproof business plan by somebody with the right prompts. You got a high probability of being able to walk into the SBA, which is us. We do those and say, hey, I've got $400,000 in available line of credit. I want to acquire $2.5 million book of business over here. I'm looking for a 7A loan. Then at the time of closing, we can use those credit cards and that line of credit as the down payment that the SBA is going to want. Sit on it for another 18 months, refinance it, get your cash back out of it. Right? And that's the investor arsenal. it would take you millions of your own dollars to accomplish that, which takes a long time. No matter how much money you have, there's always a bill around the corner. It takes a long time to save $1 million, where you just got it sitting there and you don't have it accounted for, or it isn't future money. Like if I sell an event now and it doesn't happen for 6 months, that I may have a lot of money in my bank account, knowing in 5.5 months I got to spend every damn bit of it for an event. Right?
Mm-hmm.
It's the same in every business, but now all of a sudden you're leveraging these financial tools, and this is how the rich get richer. They don't get rich by saving their money and investing their own cash. They get rich by leveraging other people's money, lines of credit, investors, lending like this, because you can grow a lot faster. Just like they'll give you 2 times for a $500,000 book of business, they'll give you 10 times for a $5 million line of business. Right. The way to get there is with debt.
Yep.
That can be the hard pill for people to swallow, for sure, man. Well, we're at the top of the hour. Brian, I know we've got a call. But real quick, as we're in closing, thank you guys. Again, it kind of goes back to the relationship and everything. It's like, I gave these guys a late call last night. They both showed up, so I do really appreciate that. And I know we're all busy, so thank you guys for taking the time. Real quick, Brian, if people want to reach out, and I'm going to do a separate post, y'all, with some links so you guys can book some time with Brian. I'll get you a link to Closer Capital so you can submit if you're looking for a line of credit. Again, AEP is right around the corner, and for PNC, if you ain't locked in, profit sharing is right around the corner as well. So you could really double down in Q4 and maybe hit that bonus that you've been looking to do. So I'll do a separate post, but real quick, Brian, how can people find you? How do you want them to reach out if they want to talk some shop?
Email's best, Brian@clearviewinsurance.com, or Facebook, send me a message. We're right here. It's all good. Whatever. Instagram, whatever you like.
You're more on Instagram than you are Facebook, I feel like.
Yeah.
I'm a Facebook guy. I'm a Facebook. I don't know what it is. Well, now everything's like freaking connected.
It's
anyway.
all connected, right? It's all the same shit.
Yeah. Stewman, what you got, man? How can people reach out?
I talk shit on every social media channel. I don't fuck with TikTok, but other than that, you can find me saying rude and uncanny shit pretty much anywhere. So, that's just what I do. Just putting my voice out. But I'm sure Joel dropped the link to Closer Capital so we can track that it comes through here and make sure that we treat your people correctly. Just like treat everybody, but we give you guys a little special treatment. But, I'm Hardcore Closer on Instagram, Ryan Stewman on Facebook. I will never sell you Bitcoin or slide into your DMs trying to pitch you on some shit if I don't know you, so be careful.
I love it. All right, y'all. Well, happy winning on Wednesday. You know what day it is.
Nice to meet you, Brian.
It's the peak of the week, y'all. Keep your pedal to the floor and finish out the week strong. We appreciate you guys, and we will see you next week at 9 a.m. Central. Later.
All right.